Hey, everyone. We are back with another episode of the MHP Show podcast. I'm your host, Derek Vickers. On the MHP Show, we're talking about mobile home parks and operations. Today, we're going to talk about real estate syndications, talk a little bit about the economy. And that's what we talk about here on the MHP Show. So, look, if you have any questions, would love to answer them. You can jump in and shoot those in the chat. You can also go check out me on all social media platforms. You can check me out on LinkedIn, Facebook, all of them. And send me a message if you have questions about mobile home parks. You can send that to me. I'd be happy to answer it and help you. I get questions a lot. I can get to them as fast as I can. And if you go check us out at victorycapital.com, we have a pipeline of deals coming. If you want to get on our investor list, just shoot me a message on any of the platforms and we can get you on the list to look at future deals. Would love to set up a call with you to talk about that when we have a deal coming up. So look, this past week, I think the stock market made a dip, and I think it's returned back to essentially where it was now. But it always brings up the question, right? And people, you talk to investors, you talk to people that they're like, oh yeah, I don't want to invest. I'm happy with stocks. I'm happy with my whatever, right? Stocks, 401k or whatever. And I think a lot of it is that they don't really understand what a real estate syndication is and how you can actually multiply money in real estate, how it's a tax benefit for real estate. And, it's just comfortable for them since we've all been, trained that the stock market and your 401k is the safest investment, right? The same people that told you that are the same people that told you college was good for you. Maybe college was good for some people, but it wasn't good for me. And the same people that tell you that are the same people that tell you other lies, which maybe I'll start getting into if I get more hot here about that stuff. But, it's cool. If people don't understand what a syndication is, I get it because it's still relatively new. I mean, in 2012, the Jobs Act came out, and that's what actually allowed people and entrepreneurs to raise outside capital. I'm not an expert on the Jobs Act, but that was only in 2012. So it was relatively new that you were able to do this. And that particular ruling or act made it easier for people to do crowdfunding and syndications. And so I've talked to people that, new investors that they're like, why are you doing this? Or why are you syndicating? Why don't you, if the deals are so good, like, why don't you just raise your own, or why don't you just do it yourself? And, I thought it was pertinent for me to jump on here and just explain some of this to people. It's pretty obvious as to why we would want to, do this, because we want to scale. Like, I don't want to own just one mobile home park. And I don't think some people do. And, that's maybe better for some people. But I want to grow my portfolio even bigger. And everybody, if you're an investor in real estate, you're running your own syndications or whatever, you're going to want to scale, and your ambitions are always going to be bigger than your wallet, especially in real estate, because you're always going to be wanting to doing bigger deals. You're always going to want to do more deals. Like it just happens, right? And so in order to do that, you have to syndicate. And even if you look at somebody like, Jeff Bezos, I mean, I don't know how much percentage that he owns in the Amazon stock, but it's definitely not 100%. Right. So I would rather have a smaller percentage of something bigger than, 100% of something smaller. So again, that's relatively new. And I think a lot of people don't know about that, because this stuff actually used to only be offered to like the wealthiest, 1%, or the 1/10 of 1% that would get access to these types of syndications. But now regular people can get access, and accredited investors can get access to these deal offerings. I mean, you see people advertising for them all the time. I know I do. I get, who knows how many ads from people that are doing syndications and whatnot. But this is just such a great thing for the average person, because even if you say, well, I'm not an accredited investor, still things you can invest in. And if you are an accredited investor, that doesn't mean you're like ultra wealthy. You can look up what the definition of accredited investor is. You have a net worth of $1 million or more. And I think you have an annual income for the past couple of years of 200,000 or more. I think it's 300 for a married couple. Shoot it in the message if I'm wrong about that. I'd have to get the exact numbers. But look, that's still nowadays with inflation, that's still not, it's still the average person. And I've talked to people too now that are like, hey, I'd rather have money on the sidelines now. Now, more than ever, I mean, if you go to the grocery store, here's a freaking perfect example. Here's a perfect example of this. When I first moved to Florida, I went to the grocery store and there was this specific deli chicken that I like to get there. And it used to be like $6.99, $7.99 a pound or something like that. I never go to the grocery store. My wife, my lovely wife, Jasmina, shout out to her. She does that. So I didn't really see the price fluctuations that much. And so when I went to the grocery store and saw that this particular item that I just mentioned was now $13.99 or $14.99 a pound, that the price had doubled since 2013, 2014. So if you think about that, like your money is getting crushed right now by inflation. It is getting absolutely murdered, right? And so you have to get your money into something that's going to grow it. I mean, if you got money in the walls at home, maybe you do. I know people that do that. I was talking with a seller and, old school guy, only accepts cash, trying to get him to sign a deal. And I was like, hey man, I'm going to bring you 50 grand cash to basically sign the contract. And he's like, nah, Derek, I got enough of that at home. So there's still people that keep cash around. I'm not saying cash is trash. Like now cash is actually pretty important. But if you have that money just sitting in a bank, let's say you had that $100,000 sitting in the bank in 2014, from back to the example I just mentioned, and then you fast forward to now. So that $100,000 had the purchasing power to buy you, let's see, whatever the number is here, 100,000. Let's say that particular item I was talking about was $7. So 14,285 pounds of chicken there. Now at $14, so it's half of that, right? So your $100,000 now can only buy you 7,142 pounds of chicken at Publix for this particular one. So it's not that your $100,000 is not there. It's there. It's totally there. But it doesn't buy what it used to buy. Right? And you know that if you've been to the store. And this is why I freaking love real estate. Because when your money goes into the asset, right? So the asset appreciates with inflation because rents are going to go up every year, you're going to decrease in expenses every year. The asset is going to appreciate in value with inflation while it pays you a little cash flow. So you put your 100,000 into a deal, boom, it's sitting there. It's going to kick off some cash flow, 4 or 5% in the first year, maybe 7 or 8 the second year, then 10, then 12, and going up to the 5th year. So it's going to pay that cash flow. And that while that $100,000 is there marinating and churning, right? So when you get to year 5, maybe your 100,000 is now worth 175,000 or 200,000 or even more, depending on what kind of assets that you're investing in. Right. So you're getting paid the cash flow and it is appreciating over time. And if that were the case, right, you had invested that in 2014, right, your $100,000 would probably be worth, over $200,000 now. Versus if you kept it in the bank, versus if you kept it in the bank, because that is the absolute worst place to keep it. And so this is why I love real estate syndications. This is why I love real estate in general and why I love mobile home parks specifically. Because I've had people come in and tell me, they're like, oh, well, I think it's, it's not guaranteed real estate. I'm like, what? Like, not guaranteed. The rent freaking comes in every month. Like, I don't know if you get any more guaranteed than that. And then in a mobile home park, the tenants own their homes. Okay. The tenants really never move out of their house. I mean, we've had people in our parks that have been there, I don't know, triple the amount of time that we've owned the park on the road this week. So we've had tenants that have been in there way longer. So the risk, I don't think there actually is that much risk when you talk about mobile home parks. I mean, when you talk about stocks, I mean, look, one day, bam, the market can drop, 3 or 4%. The rent still comes in at the property. Maybe the value can fluctuate with interest rates, but I'm not a seller. Like last year when it was a bloodbath and rates were just, rates are still high, right? But I'm not a seller, like I'm not selling, right? So maybe the property would appraise for less right now, maybe in last year for sure. But if you're not a seller, like it kind of doesn't matter. It kind of doesn't matter. And you are still going to receive cash flow from that particular real estate investment. And the underlying factors, especially in mobile home parks, is the supply and demand factor. Everyone knows that there's less supply and there's a very high demand for these things, because in these inflationary times, the people that were paying the $2,500 a month to live in a nice apartment, maybe some things have happened and they can't do that now. So maybe they move down in the affordable area, right? And so mobile home parks, I mean, they are the cheapest place in town. So they performed during COVID, they performed and they will perform continually. And if someone does have to sell their home and move out of your park right now, I can guarantee you will have someone probably quickly come and buy that. I get people ask me too, like, oh, well, what do you do, Derek? What do you do when someone moves out? There's risks there if someone moves out. I'm like, they don't, for one. And if they do, it is very easy for us to bring someone back in. And so in my opinion, the risk is not in mobile home parks as an asset class. If I had all my money in stocks, then to me, that would be risky because I don't have any control over it. And I'm at the whims of the government and what all those psychos are doing there, and the Fed, which we are at the whim of the Fed a little bit in real estate. But I think my whole point here is that I have 100% control over the real estate and how it performs. If I have my entire net worth in stocks and something happens, to me, that's risky, dude. I just don't like that. Maybe that's just me because I don't understand it. I know there's people who do very well investing in stocks. It's just not my thing. I'm a simple guy. I like the fact that I can go touch the asset. I like the fact that I can go there. If something goes wrong, I can handle it. And I actually like the fact, I've had people ask me too, like, hey, if I get into this deal, and I need my money back, I'm like, sorry, this is an illiquid investment. Now, some people may think that's like, okay, well, real estate is an illiquid investment. I don't like that. You may like the fact that you can buy stock today and go sell it tomorrow, or buy a share of this and buy a share of that and sell it tomorrow. That's fine. But I actually like the illiquidity part of real estate. And I'll give you a couple of reasons as to why that is, because when I'm not liquid, it requires me to go hustle. It requires me to go create more income. And every time I've done this, when we first started buying parks, I literally never took an acquisition fee. I did take acquisition fees. I rolled it in the deal. I had stock that, the last company that the insurance gig that I had, they gave me stock, every year. I sold that, put it in, and virtually I had a savings account It wasn't that much money. Don't get me wrong. And I took that to zero. Right. And so I just invested everything. And at the time it was a bit painful for sure. I mean, I did still have the sales thing going on for the first year I was investing in deals, but it wasn't easy. Right. But now I look at it and I see what that money is transformed into. It's like, man, like I am so glad that I did that. So it's more of a especially real estate, it's a deferred reward kind of thing. But to me, at least, like that is not risky. And I love the illiquid aspect of that because it makes me go out and hustle, and I'm not going to go buy dumb shit with my money. Okay. And from what I've found, all right, is that when you keep money around, when you keep money freaking laying around, you're going to find dumb shit to spend it on. I mean, there is no question about that. You will find dumb shit to go spend your money on. All right. You will. Some people are more disciplined, but I know when you have money sitting around, it will find things to go, spend itself on. And if my wife is listening to this, if I kept around a bunch of cash, she would definitely find a way to spend it. I love you, Jazz. I love you. So anyways, we were talking about some risk and return, and again, with your mobile home park assets, I think the risk is very low. And, again, it depends on your financial goals and what you want to do. But, investing in syndication to me is not a risk. Now, I will say this, the bigger risk in a real estate syndication is the person doing the syndication. Do they know what they're doing? Have they made mistakes before? Have they screwed shit up before? And when things did screw up, did they see that through to the end? Did they actually go in and fix the problem, or did they freaking bail? Right? So those are things that you want to find out. Right? And, it doesn't even have to necessarily be based on track record. It's like the ethic level of the person too, because, there's a lot of unethical people out there. And, whenever I talk to investors, you can do all the investigation on me you want. You can do a background check on me. That's fine. You can hire a private investigator, have them follow me around. I don't care. You can do that. Cause I don't do anything bad. And, I'm totally freaking cool with that. But there's people out there that, unfortunately with the Jobs Act, it made it, easier for people to do this, but also criminals do it as well. And I think if you are looking for that, you just need to talk to the person and make sure that you can trust, the person, because that is big. Also, when we're talking about syndications, I get questions all the time about leveraging. Derek, why don't you just buy the deal all cash now? Well, if it made sense, I would. But, leveraging obviously helps. We can increase our cash on cash returns with leveraging. And, now I think with deals and rates being higher, there are some deals that you would want to buy cash. There are situations where that makes sense. But in my opinion, now, if you can make deals work at, 7.5% and 8% rates today, you are going to be in a really, really good position, 4 or 5 years down the road when you're looking to exit or refi or whatever that is. And so I'm a big proponent of still using leverage today. Now, unfortunately, the banks, the amount of leverage that they're going to give you today, is not going to be a lot, but you got to understand this. Don't look at the bank as an evil, they're a partner. They're your biggest partner in the deal. They're not going to let you do anything stupid. Right. And so I think people get concerned because of the stuff that's happened in multifamily, that's going on now within the past year with people getting, these bridge loans with floating rate debt. No one could have foreseen that the Fed was going to raise the interest rates as much as they have. So, people got into trouble and people were starting to worry about debt again. I had a guy that he didn't want to come in on a deal because we weren't paying all cash for a deal. But, again, back to what I was saying about the bank is like, the bank is your partner on the deal. They're not going to let you over leverage the deal. Like they're going to give you basically your proceeds that you get from the bank is going to be based on the debt coverage ratio that the property is how it's performing now. Like the banks are more conservative now. So, if a bank is going to do a deal with you, it's, they're underwriting it rather conservatively. And so, they're your partner. And again, I think if you can get deals done now, like you're going to be in great shape coming 4 or 5 years, down the road. And that's why too, like, I think, now it's such a great opportunity and time to invest in real estate. It's a freaking great time to invest in real estate. Because, everyone's heard the saying, I forget what it is verbatim, but Warren Buffett says when there's blood in the streets, get greedy. When, there's whatever, you guys know the saying. Maybe somebody can message it in here if you're on here to give me the exact quote of that. Let me find that quote. Let's see. Yeah, greedy when fearful or something. Oh, yeah, be fearful when others are greedy and greedy when others are fearful. Because of what I just said, right? And I'm telling you, if there's money on the sidelines right now is like the best time to put that money to work and great deals. Obviously, you do your due diligence. You have to find the right deal, but you will be glad that you did 5 years from now. And you don't want to be the person that misses the opportunity in real estate in general, or especially mobile home parks, because I think there's opportunities coming that we are seeing right now. And, people are saying like, oh, I see all the deals out here. They're still overpriced. We're not seeing that. Our acquisitions team, we're literally ear to the ground every day. We've been doing this like hard for a while. The gap's closing. The gap here, seller was up here. We were here last year. It's closing. Because there's more deals. I'm not saying F no to as many deals as I was saying F no to last year. And when I hear these prices on some deals now in markets that we're looking at, it's like, that's not that bad. Maybe you can make sense of that. And so I don't know what anybody else is seeing in their markets. And yes, there's still guys out there that are just, there's still people out there that are just ridiculous on prices, but they're not a real seller. I got sent a deal this morning that was like a 4 cap. It's, I think 100 or maybe 50. I can't remember what it was. Or maybe 41 spaces or something. Anyways. I just don't think that person's a real seller, right? Because you can't pay these 4 cap numbers in this environment. So those people aren't real sellers. Like if that person had something happen to where they had to sell today, then, maybe that would, I guarantee you they would come down on their price, right? So that's just a little tip for you. The 4 cap sellers are not real sellers. Now, you may see those deals come out because they get called by a broker, and broker calls me, and I'm like, yeah, I'll sell for a 3.5 cap or a 4 cap, and then they'll pitch it, send it out to their people, and then everybody thinks everything's overpriced because the brokers are sending out deals that that's not going to trade and no one's going to buy anyway. So there's deals out there is my point, and taking advantage of this opportunity right now is huge, is huge. Also I wanted to mention something here on, I've had people ask and say, oh, well, Derek, I just invest in the S&P 500 and I get, 10% a year or whatever. Well, that's great. You can do that if you want. It's liquid, blah, blah, blah. But I did some research on this. And if you had invested 100 grand in the S&P in 2019, exactly 5 years ago, it'd be worth 177 grand today. Not terrible, actually. That's not terrible, actually. Now, if I had put 100 grand in, let's just say, a real estate deal, I know I would have doubled my money or 2.5x my money while I made cash flow, right? While I made cash flow, I got paid cash flow every year. I don't think the S&P pays a dividend. They don't. Unless I'm wrong about that. Not an expert on that. Depreciation. I would have been able to accelerate the depreciation and probably take almost 100% of that $100,000 in depreciation. Maybe not all that, maybe 70 or 80%, but somebody would have to check me on the math on that. Because again, mobile home parks specifically, what you're paying for is more land improvements. So you can actually accelerate the depreciation on much more of the purchase price, more than you can on multifamily. So while your money was sitting there, you're making cash flow, you've got tax benefits. Because as you know, most real estate investors don't pay taxes. They don't pay a lot of taxes. They pay far less because the way the system is set up is to incentivize, real estate investors via depreciation and other things. And so I just, I love real estate. And, let me look at this example again. And yeah, so, I guess, your S&P investment of 100 grand, turned into 177 in 5 years. And that's okay. But I know if you get in the right deal with the right operator and the right people, your $100,000 would multiply tremendously, a lot more than it would in the stock market. And look, some people you may be like, hey, Derek, I'm a stock market kind of guy, and that's okay. It's totally okay. Everybody has their thing. I'm just giving you my opinion on it. And, I have a friend that this is what I don't like. I have a friend who invests in the stock market heavily, and I can tell how the market's doing. I don't even need to look at it when I talk to him because, hey, Derek, not so good. The market's down today. Oh, hey, we're doing great. The market's up today. So, not saying that real estate can't be stressful, but I don't want to be stuck. I don't want to be stuck on that. The other thing I wanted to mention about is 401k. This thing, the 401k thing. What's up, Mark? God, don't even get me started on this. I mean, most people that invest in a 401k, you don't even fucking know what you're invested in. I mean, this is the reality of the situation. You're like, oh, well, they match it at my job. So boom, we're going to, hey, I'm going to put it in there without even looking. You don't even know what it's invested in. Like, it's very like, you're not at cause over your money. So I know people, I'm not going to say specifically who they are, but they've worked hard their entire freaking life. They put money in their 401k. They've done all the right things. And, I want to say that they told me they had maybe $400,000 in their 401k to live when they retire. So this is two people, $400,000. They retire when they're 65. Let's just say they live 20 years after that. That's 20 grand a year. 20 grand a year. Now, well, that doesn't even factor in. What that doesn't factor in is the taxes. Let's Let's see what that is. I guess it would be just at whatever whatever your tax rate is, when you retire. So you're going to get taxed. So you're going to get taxed on that at the end. Okay. I mean, maybe I'm not doing this correct, but if you have that $400,000, you're like, hey, we're going to take that we're going to take it out at retirement. And, I don't know. I'd have to imagine you're going to pay at least 25% taxes on that. So you really get 75% of it. You get $300,000. Divide that by 20. You're $15,000 a year. Look. I mean, you may say I can live off 15 grand a year, but you're not going to have any fun. Like, who wants to do that? Like, you've been hustling and worrying in your whole life. Now you're retired and you want to relax, and you still have to worry about the prices at the grocery store. Now, I would venture to say if that person had been, if you took that money, let's just say like, hey, we want to put the $400,000. Let's just say half of it. We want to put the $200,000 in real estate. Okay. And, pretty certainly I know that we can double someone's money every 5 years, right? I know we can for sure. So let's say the first 5 years, your 200 turns to 400. The next 5 years, your 400 turns to 800. The next 5 years, your 800 turns to 1.6. And then after 20 years, it's 3.2 million. You got to pay cash flow the whole time, tax benefits, depreciation, and whatnot. I mean, that's a big that you retire with 3.2 million. That's a different life. It's a different life than retiring with 300 grand or 400 grand. So it's just amazing to me that people still get sold this crap about a 401k. And just because, they're matching me at work, it's free money. Yeah. Look, I have zero money in a 401k, and I've never put money in a 401k. My wife, when she worked at a place, she put money into a 401k. And then last year I was like, look, gas it out. We're going to put it in these deals. So we did. And if I had money in a 401k right now, I'm not giving financial advice, by the way. This is just what I would do personally. Me personally, I would do the whole same thing and invest it in, I would invest it into real estate in some form. I mean, just even if your money 1.5x'd every 5 years, right? And that would be a bad situation, like a worse situation. So you have your 200 grand times 1.5 times 1.5 times 1.5. So it's still more. Your 200 grand turns into 675. I think that's the right number. So 5, 10, 15. Oh, I'm wrong. It's $1 million. It's $1 million. So look, I got to tell you, the people that told you the 401k was the best way to go for your retirement were the people that told you that little pokey thing was good. The little thing that they put in your arm, they told you that was good. They told you that you should go to college. They told you that was good. They also tell you to save money in the bank, put all the money in the bank. Those are the same people tell you many, many, many lies. Put a lie in the comments if you've got one. Because I know we have been freaking told a bunch of lies. A bunch of lies about everything. When I unraveled all this bullshit that I had in my mind about finances, I started to actually do well for myself because I started understanding finance, because I thought, I'm like, man, how's this guy get 50 million, 100 million bucks worth of wealth? I actually thought that they got paid via W-2. So if I looked up someone's net worth and, they're worth 500 million or 100 million bucks, I thought they got a W-2 at the end of the year, because I got a W-2 at the end of the year, that it would say $100 million, which is totally not true. And it was just false information. So you got to strip away the false BS information that you have, because what we do mentally is we like to get advice from people, and we oftentimes take that advice from people that aren't in the position that we want to be in. So if you're like, hey, I want to be worth 10 million bucks, you should not take advice from, your friend that makes $100,000 a year working at a job. Nothing wrong with that. You can do what you want. But you should not take financial advice from that person. You're like, okay, this person's doing better than me now, and they say to invest in a 401k. So that's what I'm going to do because they're doing that at their job. No, you need to find someone that's worth 10 million bucks or $1 billion and take their advice for it. Because I used to do this too. And that's how I know this, because I took advice from people that were in a lesser position than me. I never take advice from someone that's in a lesser position than me. Like, I've had people that have told me, like, hey, you need to go talk to my financial advisor. I'm like, okay. How much is your financial advisor worth? Well, I don't know. I mean, is he on real estate? Is he on businesses? No, he's just a financial advisor. Then I'm good. Because how is the person doing that going to tell me what to do with my money when he's not even worth that much money? So, you just got to be careful who you take advice from on this money thing, because there's been so much freaking lies about money. When I started sort of detoxing my mind about money, it was in, I wouldn't say 2013, 2014, something like that. I thought, invest in stocks, 401k. And then I started learning. I'm like, okay, wow, this whole thing is inverted. Everything that I've been told is actually the opposite of what it is. And that's when I started doing better for myself. I was in sales. I went from a no-name BS terrible salesman to one of the top guys in the company. I had my own office. I had 100 and some salespeople, but I got my mind right around money. And I started investing that money is when we started buying mobile home parks. And then I retired from the insurance business when I still get paid some money from that business, actually. I was, maybe when I was 31, 32. But, nowadays it's so easy to become a millionaire in this day and age. You just got to get your money right, around money, and quit investing in that 401k, for God's sakes. Let's see. You can put in a 401k what's the most you can put in a 401k per year? 23 grand. Like, 23 grand a year is all that you can put in. Okay. Maybe you're like, okay, Derek, well, what if I do that for 20 years? What if you do? It's 460 grand. In 20 years, 460 grand is not going to be worth anything. Or you do it for 40 years, and it's 920,000. Okay. Yeah. Okay. You can give me a thumbs up or whatever you want to give me if you think 920 grand in 20 years will have the same purchasing power as it does now. That's totally not going to happen. That's totally not going to happen. That's crazy. They don't even let you put as much money as you want to in it. It's limited. It's crazy, dude. It's crazy. What do you think that, I mean, it's just wild to me. It's just wild to me. Like, I just can't subscribe to that. Because look, you work hard. You deserve to create wealth for your family. You deserve to create financial success. And I know a lot of people do that. And you're not going to be able to do that through your 401k. I mean, you're not going to be able to do that. So look, get your mind right around money. Maybe I'll do some more things, some more podcasts around money and whatnot. But mobile home parks and real estate is a ridiculously good asset class to do that in. There's great people you can invest with, some great people that I trust. And so look, you got to start getting serious about your wealth. You got to stop spending money on bullshit. Like I hear people that I talk to people that we're trying to get to invest. And they're like, well, we put a pool in our house for $100,000, so I can't invest. I'm like, oh, this is crazy to me. That's just wild to me to even think with that. That's just not obviously a very good use of your funds. I've also heard stories of like someone just purchasing cash, a house for $2 million, $2 million. California, probably get a 1,500 square foot house in LA for that. Maybe not, maybe a little bigger than that. But, guys, I mean, it blows my mind as much data and information that's out there now that people are still dumb on this subject. People are still dumb on this subject, and they still get hit with these old ideas that we've been indoctrinated with. And so many people out there are given the information of how to unindoctrinate yourself on that. And you just got to start listening to the right information. And so if I can leave you with anything today, it's this. It is this. Like if you want to create wealth and you're sick and tired of being where you're at, you're sick and tired of being stuck, you're sick and tired of not having enough money to do anything, you have to start investing your money. Like you have to start investing. And no, that's not in the company 401k. You have to start investing because you are getting just slaughtered with inflation right now. I mean, slaughtered, more than slaughtered. And you have to get that money to work for you. You have to get that money to work for you. In real estate, mobile home park specifically is the best vehicle, in my opinion, to do that. Look, all my net worth is in mobile home parks. I believe in it wholeheartedly. And that's just my thing. So that you got to get your money to work for you. You got to detox your mind of bullshit financial advice that you've been told. I mean, think about the data that you've been told and like, does that work for me? Hey, you can ask yourself this. You can ask yourself, hey, what are the money beliefs and considerations I've been operating with? Have they worked for me? Am I in a position that I want to be in right now? And you're like, no, well, maybe you need to change something. Put your freaking ego to aside and quit being, oh, I know everything. And, fix yourself because you can. It's never too late. It is never, ever, ever, ever too late. And another thing I don't even know how much this has made me. Do not take financial advice from someone that is not in the position that you want to be in. Just don't do it. Just don't do it. That goes for anything. Don't take marriage advice from someone that has a shitty marriage and cheats on their wife. Don't take health advice from someone that's fat. Like what's the person? I'm sure someone's posted the meme, all these Don't take, that goes for anything. And God, if the government is pitching it, this is like, oh my God, this is like, I don't know how people, if the government pitches it as a good thing, it's probably not a good thing. I mean, am I off base on that? Am I off base on that? I mean, I don't think so. I don't think so. And so look, those little pieces of advice have done a lot for me. They've helped me get to a point from, actually, having to do odd jobs for money and, being broke and not being able to buy shit from the grocery store to up to, having a net worth. I can close my own deals now, having, a level of financial freedom that, I never thought I would have really. But there's always the next level. This is a fun game for me, so we're going to keep going. But look, if you guys have questions, would love to help you in any way I can. I'd love to help you in any way I can. You can reach out on any social media platform. Please like and subscribe to the MHP show. It's not easy to put on a podcast every week. And would love to hear any topics that you want to go over, any topics that you want to hear. And I will see you all next week. I know we have some episodes, some non-live episodes, and then we'll do some more live episodes. And also, if you're interested in learning more about real estate syndications, you're an accredited investor. If you want to know if you're accredited or not, if you want to jump on the call and just get a little bit more education about real estate syndications and what they are. If you got money sitting on the sidelines, would love to do a quick introduction call with you. You can go to victorycapital.com and set up a call with me, or you can shoot me a message on Instagram, Facebook, TikTok, LinkedIn, whatever. Would love to chat with you. So we will see you all next week. Peace out on the MHP show. And don't be a freaking dummy when it comes to finances. Don't do it. Peace.